Hello, welcome to this follow-up episode as promised. So now we are going to talk about what worked in my case. The first thing that I did was to say I'm not going to accept the price as I find it in the market. I am going to determine which price I'm going to buy it and which price I am happy to sell it. So that was the first adjustment that I made. Instead of what I did with Shoprite and Mr. Price, that is going and buying at whatever price, I now prefer to buy shares that are not close to or just above the all-time high prices. There are reasons to support why I no longer do this, but mostly it's because in many cases when a price does that, it's going to significantly pull back. It might not return to that level anytime soon. The second thing that I did was to work with stop losses. Before I enter into an investment, I need to ask myself, if I am wrong about this investment, where am I going to go out? Where am I going to say enough? I'm taking my money out. I have set that level usually below 10% loss. If I'm seeing that the fundamentals are such that I'm expecting it to go down substantially for a long time, I'll get out even at 1% loss. So I also encourage you to incorporate a stop loss in your investment strategy. That will help you greatly to limit the downside on your capital while increasing the probability of the upside. So if you fix the downside, the upside is going to sooner or later catch up or take care of itself. So make sure you incorporate a stop loss. It doesn't matter if you are buying ETFs or you are buying at a predetermined maybe time frame of monthly. You need to sit down and do your homework so that you do not buy expensive all the time. The other thing that I incorporated was a take profit strategy. When I go into an investment, I ask myself, how much am I expecting it to go up by? What level do I say this is enough for me to take a profit? That is something that you have to determine on your own, guided usually by the economic environment. I am in South Africa and the inflation is about 4%. If I have made 10%, 15%, I am happy because I've taken more than inflation and I'm going to cover my cost and also potentially anything else that might come thereafter. So make sure you take profit consistently. I have refined my strategy. At the beginning, I'll take all my profit out. Nowadays, I do partial profit taking. If I have reached my target, I take maybe 60% of the profits. I leave the remaining 40 to see if the price is going to extend upwards. If it does, I'm going to continue holding. When it reaches another level, I take another percentage, probably maybe 20%. Then I'm left with still another amount. That way, if price pulls back substantially, I'm only going to be hit on the little that is still remaining in the market. The bulk of my profit, I would have banked it. So also operate using a profit-taking model if possible. Then the other thing that I incorporated was to say, what should I do if I see that I am wrong? If I see that I am wrong, I went into a trade and the expectation has gone against me, I am going to come out of it. It doesn't matter if I was expecting to hold it for a month or two. If the fundamentals show that I am going to be wrong for the next foreseeable future, I am coming out and standing on the side and look for a better trade or investment. Then also you need to incorporate a profit spreading strategy. What do I mean by that? If you make a profit of, let's say, 20,000 Rand in an investment and you have taken profit, then you need to make sure that profit goes somewhere else where it is a higher probability of growing further. In this in one of my favorite books, which is called The Richest Man in Babylon, there was a saying that whatever you earn, you must save. Whatever you save, it must earn an interest or a return. That interest or a return that you get must also earn its own interest or a return. So if you see, you begin now to request that your money continues to bring in more profits. So if you do it consistently, then your money is continuously growing, giving birth to more money as you continue. Sooner or later, you realize your net worth is consistently in an upward trajectory. Then there's the question that often comes up that if you buy and sell too quickly, you are now going to be regarded as a trader. In other words, the tax man is going to look at you and say, you are not an investor, you are now a trader, therefore you need to be taxed on what you have made. How did I resolve this? I had to ask myself an honest question to say, what do I want at the end of the day out of my investments? I told myself the goal is only one and it must remain one. My goal is to make sure that my money consistently grows, and I am not going to consider any other thing. For example, some people say hold for 10 years and see what happens. No, for me, I'm concerned about making a profit and growing my net worth. So how do I regard tax? I regard tax as an incentive that I pay to government as a thank you note for them giving me an opportunity to be able to make money. So I am always happy to pay tax. Why am I happy to pay tax? Because I know that I have made more money than that I started with. If I am not paying a tax, then I'm going to be unhappy because I know that I'm sitting at a loss somewhere. So that is how I view taxes. If I make 20,000 Rand and the taxman says I need to take back 8,000 out of that amount, I am happy to pay it. I am keeping 12,000 Rand, they are taking 8. What's worse? Am I willing to sit in a loss position so that I don't pay tax? Well, I would say I have not paid tax, I've also not been paid. So I'm in a worse off position. So that is how you need to view tax as well in your investments. The other thing is that what is better, if you bought a share today and the price went up by 300% after maybe a month, what are you going to do? Forgo the 300% profit so that you don't pay tax? What if that company goes through a Steinhoff scenario, maybe a month after the 300%? The next thing you know is that investors are dumping it. All your 300% now becomes maybe 1 or 2%, or maybe even minus 20%. So what have you achieved? Well, congratulations, you haven't paid tax. You are in a better place. You are laughing at somebody who has paid tax. But you have lost money, you have not made money. So remember, tax is appreciation that you pay to the government for giving you the opportunity to be able to make a profit in whatever investment you hold. Be happy to pay it, and so shall you see your money consistently grow. Now, in closing, I would want to speak regarding the current crisis. We have a pandemic that is combined with a financial crisis. So what is my expectation? My expectation is that for South Africa, the market is going to continue in a downward trajectory, or is going to remain stagnant for a while. Why? Because we have recently gone through a downgrade. We see investors, especially the foreign component, they are leaving in droves. Many are not going to come back. And when you look at the JSE, it's a huge market. which is not only propped up by the locals, but mostly by the foreign component of portfolio investments. If they go and don't come back, it means prices are going to be suppressed for a while. On the political front, I expect socialism calls to continue. I expect parties like EFF to continue growing. And with that, the threat of nationalization comes. That would mean investors are going to stampede out of the country for a while, and with them, they're going to take down the prices of the assets that we are able to invest in or trade. So I am bearish on the Johannesburg Stock Exchange for the foreseeable future. However, I would still trade it because there would be always opportunities for prices to go up, maybe temporarily, then continue in a downward trajectory. So I'm looking for those opportunities and I'll continue trading. But once we have seen the extent of the crisis we are currently in, I'm looking to enter the American markets, the S&P 500. However, I'm expecting that there's going to be substantial pullback. It's going to go down a bit further. Then I'll use that position to enter into the American markets. So I'm bearish the Johannesburg Stock Exchange from now going forward, probably in the next 10 years. But I'll still continue to trade it because we can only trade what we see before us. That means I'll be looking more on the short side than the long side of investment. So that is what I'm looking at. And we, however, hope that things would improve. But for now, everything that I'm looking at is pointing towards investors pulling out. So until next time, where I'm going to explore my strategy, opening the charts and looking at the charts, walking back to the decisions that I made and how they turned profit, and how I managed to lock in those profits, I would say happy investing and continue learning. Don't waste a good crisis. Thank you. Enjoy your day.